Today we have quantification and costing of construction works, which is our breadwinner, we can say.
Yes, sir.
Let us start with the questions. The primary one, it is about method of measurement. Your client, a major infrastructure developer, is procuring a combined office block and a highway tunnel. So that is above ground and this is below ground. Advise the client on optimum selection of standard methods of measurement for the tender documentation and justify your choice of volumes, rules, explaining how you would manage the interfaces. So anybody wants to try? Yes, Mr. Hasan.
Yeah, let me try.
Yes, please.
Yeah, I will advise to the client to go for the CESMM because the client is the major infrastructure. This is the civil works majorly. Then CESMM 3. Then it is designed for only the it is designed for the majorly for the civil works and the small buildings like substation, those kind of things also can be covered. Here the only the office building. This is the simple building. That one also covered in the CESMM 3. And if you go for POMI, in the POMI measurement is it can be also used for civil works and the buildings. But the client is here it's mentioned that majorly concerned about the infrastructure, so I will advise to go for CESMM.
Yes. Anybody wants to add something to this, or you feel it is okay? Because of course this one it is primarily CESMM will be appropriate based on the client, because client is comfortable with infrastructure projects and he is primarily developing it. And when he is heavily developing infrastructure projects, here the office block, it may be very simple. They are not mentioning about it. It's a building or something. It's a block. So it has to be a simple building that can be dealt with the system itself, because it is having provisions for simple buildings. If you want more detail, of course, if you are not feeling sufficient enough, you can use something simple like POMI. You don't need to rely on NRM2, which is very detailed. So that is appropriate if you are primarily focusing on buildings. Otherwise, POMI is sufficient even for huge development. Still the buildings, POMI is familiar in Middle East. So that is fine. So we have to think about the client's comfortability in working with the standard method of measurement, and then the nature of job. So here the tunneling is specialist. So it has to deal in detail from some kind of standard method of measurement. So that is the requirement. It will avoid ambiguity and prevent claims because it is detailedly covering for the tunnel works. Okay. Let us move on to next. RICS Code of Measurement Practice and IPMS. Under this, a global institutional investor asks you to measure an existing multi-let office building for a financial valuation report and a new marketing brochure. What is the critical difference between the RICS Code of Measurement Practice for the valuation and the International Property Measurement Standards for offices? And how would you reconcile the data for different stakeholders? Maybe it's too much for you. So it is basically, it's not going to be our day-to-day requirement of method of measurement. It is not method of measurement, but It's a measurement practice for particularly for the valuers and for the real estate. But still, when your client is developing to commercial purpose, then you have to consider how they are going to hear financial valuation report and a new marketing brochure. So they are going to do this for commercial purpose. That is the reason they are asking. So if you have something in your mind, you can try to answer. Otherwise, no problem. If you are not familiar with these kind of things, you can improve by just adding the specific point of that you have no experience in this kind of works in your day-to-day practice. But if you have something in your knowledge base that theoretically you have attended any CPD activity, or did you go through the IPMS or RACS code of measurement practice, you can just simply say what is your level of knowledge about that. That is also fine. Anybody wants to mention something here or try something? So what will you get when you are using?
Yeah, for the
Yes, please.
marketing purpose, RICS code of measurement practice, it's providing the gross external area and gross internal area and net internal area can be advisable through the RICS code of measurement practice. For the IPMS, I don't have idea, sir.
Okay, so this is a coalition because many international organizations, they came together to prepare this IPMS kind of standards. That is particularly under development. Still, it is not getting implemented in many areas, but still for the international level of reach, RAC is also supporting this. And it has different approach, particularly for addressing the residential building or offices, commercial complex, those kind of things. They are having separate sections or volumes. Therefore, IPMS for offices is particularly specific for office building. Okay. But at the same time, RACS code of measurement practice, this is also dealing with those kind of things, like how do you want to approach the calculations to be common with international standards, then you can do that. Okay, so it is not mandatory for us. Yes, of course, this is secondary only for the marketing purpose. If your client is commercially developing something, then they need to know by external or internal areas, grass areas, lettable areas, carpet areas. So those things and all, it will cover different kind of saleable or rentable means. That is the purpose they prepare in their brochure particularly. So we have to see what kind of GIA, NIA or ITZA, these are the various definitions that is usually available under the RACS code of measurement practice. And even IPMS also developed based on those things. So particularly only for addressing the local familiarity based on which you have to decide. So since you are in Middle East, if RACS standards are familiar in your area, you can mention RACS code of measurement practice. And if you have experience, you can explain further. Otherwise, it's fine. You can declare to the panel that your BOQ experiences are only according to some standard method of measurement or bespoke method of measurement. Okay, next one, it's about BIM, inputting, extracting data from BIM. Your client is adopting BIM level 2 on a complex design and build project. As the lead quantity surveyor, what protocols and quality assurance procedures must you establish for both inputting data and extracting data from the federated BIM model to maintain cost certainty and contractual validity. So try from your experience what you need to do, or what do you think it is a best practice to do when you are using BIM kind of. So usually the cost breakdown structure as per NRM 1 and NRM 2 elemental breakdown also it is fine when you are doing with BIM object information requirement. Sorry. So inputting, what do you have to do? So it is usually the model or data quality plan. So that will be defining the level of information needed. So usually like what we see in the design stage, it is the LOD 300 for tender quantification. How do you take off quantity? So quantity takeoff, you need at least LOD 300 level of detail. Then only you will be able to take out the quantities. Yes, Mr. Joshi, you want to add something?
No, sir. No, sir. Just continue, sir.
Okay, thank you. So ensure QS team inputs cost rate data into non-graphical fields tied to the NRM classification. So you have quantity takeoff based on the LOD 300, and then you will be including non-graphical field tied to the like NRM classifications. If you are using NRM 2, that is fine. Otherwise, what standard you are following, same classification you have to include for the cost or rate data. When you are extracting, how you are going to do this? So there will be something like a classification system, uniclass, or open format, what you are going to issue for construction. So you can use those things. That will be model quantity takeoff, and then you have to do high risk manual spot check. You have to randomly take and validate that, because you can't rely on software based quantity takeoff blindly. You have to check manually for high value elements and high risk elements. Then the output will be forming into the bill of quantity. This is what we used to do when we are using BIM inputting and extracting. So usually this is the procedure, standard practice, what we used to follow. Anybody wants to add something, or we can move forward? Okay, if nothing about this, let us move. So next, tender documents, generally preparation of pricing documents, particularly BOQ, schedule of works or rates. You are advising a public sector client on a fast track refurbishment project. This is about refurbishment, but fast track. They are torn between using a traditional bill of quantities and a schedule of works. With an accompanying schedule of rates, recommend and justify the optimal pricing document detailing the primary contractual risk implications for the client and the contractor in your advice. So you have to consider this is fast track refurbishment project, and again the client is public sector.
Yeah,
Yes,
I will
yes,
try.
please. Yes, please.
Here, this is public sector and refurbishment project. So there is no design. It is not finalized. Can't be finalized. So the BOQ, it is not possible to make. So we can go for schedule of rate for each element. They can give the schedule of rate, and the refurbishment, whatever the refurbishment work, then they can price based on the schedule of rate, and the risk is there is no price certainty until the project completion here. That is a things I can advise to the client.
Thank you. So that is the right way of approaching at level 3. You have to go by what is the project nature and what is the scenario. Since it is fast track and refurbishment, it is very difficult to prepare a traditional bill of quantity precisely. So it is always advisable for this to go ahead with schedule of rates to try to maximize all possible rates. Like day works also, it will be part of it. So any combination of works that is required, you can make use of them and to provide a appropriate payment method. At the same time, as you have rightly mentioned, it may not give when we are going for remeasurement, because schedule of works with schedule of rates, it's going to be remeasurement only because you don't have any bill of quantity. And without precise bill of quantity, it is impossible to get the lump sum kind of arrangement. That is impossible. So this is mainly fast track and the client wants to complete the project on time. He is going to get the correct value that will be there because you are going to assure him with the correct value. He is going to get the value for the project because without any risk of being pricing for a lump sum basis, the contractor would be happy to quote the rates precisely. Then based on that, he is going to get paid for remeasured quantities. So that risk is not with him. So automatically the value will be there. So that is fine. So we can go ahead with this kind of answering when we get questions like this. Let us move ahead. So dealing with the provisional sum or prime cost sums on a management contract, you are preparing. Yes, please. Anybody wants to say something? Okay. On a management contract, you are preparing the pricing document for a new bespoke facade system and a specialist kitchen fit out. Advice on contract application and contractual distinction between a provisional sum and a prime cost sum, PC sum, for these two elements and explain the administrative procedure for their expenditure. Now you have two things. One is facade system, the other one is a specialist kitchen fit out. So how do you approach either through provisional sum or prime cost sum?
Yeah, I let me try.
Yes, please.
Yeah, I will advise to client go for this is bespoke facade system. So there will be the special input there. Then design input also required to the client. So I will advise to the client to go for the provisional sum for facade. When administration procedure. When administration in the post-contract stage, we can go for a like a variation. It will treat as a variations. Then the cost certainty will be there. Then for the kitchen fit out, for the common work in the kitchen fit out, the tiles and mixers and sink, it will come for those element. We can put the PC sum prime cost to control the cost to the client. Here also the cost certainty will be can be maintained in administrative time.
Okay, so what sort of procedure will be there when you are implementing prime cost? How do you do the
prime cost? It is supply item only. For these special items like mixers, sinks, those items, we can put the supply rate only. the installation cost will be the contractor can provide. Then
Okay.
balance cost be
Thank you.
Yeah,
Yes.
yeah, okay.
Anybody wants to add something to this? Okay. So this is primarily you have two options. What we are trying to do with either through provisional sum or prime cost. So provisional sum means that you are going to keep the sum and any addition to that like attendance, profit, prelims that will be covered within the rest of the items. The sum will be kept for the works. And based on the final justification or final design development, whichever is there, because when you say bespoke, that means it is going to be a specific type that is required, a selection of specialists. So you can use either provisional sum or prime cost sum. But how would you administer when you are awarding the works? Either if you are doing it for supply only, or you want to design development and install completely as a bespoke. So it depends on that. If it is a provisional sum, it will be treated as a change or variation when you are administering the procedure. But when you are doing it as a prime cost, what you will do, you will adjust the particular cost only. So what is there for PC, you will do that in the preambles, pricing preambles. You will guide how would you deal when you are adjusting the prime cost, either it is a rate or sum. Because if you are measuring by unit, then it will be rate. If you are measuring as a whole of the works, then you can go for sum. So based on which you will decide how you are going to adjust. But in the provisional sum, you are going to do it as a change order or variation, because you will calculate as a complete new item. Here it will not be that scenario, only the adjustment will be there. Let us move on to next one. So analysis of price, tender returns and tender report. So under this you have received 4 competitive tender returns for a project. The lowest tender is 15% below the second lowest, and it includes an abnormal number of zeros and omissions in key areas. Detail the steps you would take to analyze the low tender, the advice you would provide in the tender report regarding its selection, and how you would mitigate the risk of the tender being deemed unbalanced and causing post-contract disputes, because they are keeping many things as zero because they didn't price that in terms that is covered somewhere else. And omissions, they said excluded or something like that. These are becoming qualification when they put some kind of assumption what they do that is not as per the tender requirements. So then how do you deal during the tender analysis? When you receive the tender returns, how would you analyze and report, and what sort of adjustments or anything you would make before proceeding with reporting and providing your recommendation? Anybody wants to try, please?
Yeah, let me try.
Yes, please.
Yeah, first I will see the contract. First I will see the ITT, instruction to tender. Based on the instruction to tender, I will deal. If it is mentioned, if it is any missing items or unpriced item, I will take the, based on the ITT, normally I will take the highest rate and I will put there, and or average rate, and then after that I will balance the rate And in the post-tender clarification meeting, then I will I will ask them the questions like why you did not included, then those kind of things, and I will adjust the rate and I will submit the report.
Okay.
Yeah.
Anybody wants to try, or you want to do it differently? Because it is mainly mentioning about key areas. They are omitting in key areas. That is very risky. So we have to normalize the tender. Whenever we analyze the tender returns, the prices, first we will normalize them. We want to make it comparison as like what we practically say apple to apple, not apple to orange or something. So keep them identical in order to compare. So it has to be having some values within the areas where it is being omissions particularly, because the omissions in key areas. The other zeros are abnormal again. It is not clearly justifying why it is zero, because it has to be some value. If it is not, it has to be addressed with some values. Now once we prepare, at the same time, we will inform the particular contractor and expect some clarification for these particular items. And we will try to adjust it in the meantime based on any method. So you will take your pre-tender estimate. If the rates are higher with the second lowest or from there onwards, try to keep it average price. Otherwise, everybody seems to be very closer to the pre-tender estimate, then take the highest value. That is the practical thing to do. So if they are deviating much, then you will take the average. That is what you can take the figure and keep it in the area where omissions or zeros present. So you have to include them, then you will do the comparison. At the same times, on the post-tender clarification meetings, you will try to get clarified with the particular contractor whether he mean to observe this cost somewhere else. That's why he is putting zero, but he can't do any omissions because those are the requirements from the tender itself, without which it cannot be considered as a complete in nature. So this will cost post-contract disputes. So let him understand that we will do these adjustments and compare. Otherwise, let him give the prices for the items they omitted. Then we will consider that based on our time permits or something. And then we will see whether still this is the lowest tender or not. Then based on which we will do the comparison and do our reporting with recommendation. That is the procedure we follow when we are doing some of the tender normalization before proceeding with analysis and reporting. Anybody wants to add something or you have something else? So let us move on to next question. Target cost pain gain mechanism. Your client is using a target cost contract. The current estimated final cost is, this is in sterling pound just for, but you can take it in your local currency, 1.2 million, above the agreed target cost of 10 million. The pain gain share is set at 70-30 ratio between the client contractor. Calculate the preliminary pain for the contractor and advise the client on the commercial management actions you would initiate to bring the project back towards the target. Anybody wants to try?
Yeah, let me try.
Yes, please.
Yeah, here the 1.2 million exceed the target. I understand. Then based on that the client target cost estimate, the pain and gain mechanism will be there. Then here the pain and gains set as 70 to 30, 70 for client and 30 for contractor. So the 2.2 million, it will be share by the contractor. 70% of the pain will be in client, will be in with client, and 30% for contractor.
Okay.
Yeah.
Anything? So management, commercial management actions you would initiate to bring the project back towards target. Anything? Because this is current estimated final cost. It's not incurred cost. So, Rasan, it's
Yeah.
usual procedure. You have to try and seek ways to minimize the impact. Still, it is estimate only. So, what you will do normally when
I will
you think about
negotiate.
some sort of, yes, of course, try to do what you can do to bring the cost down and back on track. So don't think, since it is mentioning target cost, pain gain mechanism, it's all common. But still, what you will do when the costs overrun, if you expect something which will not be within your budget, what you will do normally? This is at the estimation stage only. Still, it is not an incurred cost. So although you will advise the contractor that there will be pain of 30% share of 1.2 million, which will be 360,000 on his part, that will be on paper still. But what you can do to bring it down? Value engineering. Value engineering is the usual thing you can do. That is the normal procedure whenever you think that the project cost would exceed the budget, then you can seek ways to reduce the cost. So what are all the way? Primarily we have the value engineering. Immediately you will implement a formal value engineering exercise workshop, and you will see how you will implement the cost value meeting and reporting and scrutinize change control procedures, and let the client take, because he is also going to incur 70% of the cost. This is going to be added to the project value. It will be paid to the contractor. Although the 360,000 will be from the contractor, that is from his part. You are not going to deal with that. You are going to deal with what? The client's part. 70% you will add to the contract value. Okay? So that will be there for the overall impact, but you have to see ways to minimize the impact by doing some sort of value engineering or some sort of method related improvements. Whichever possible, you can try to do and minimize the cost. Anybody having something to add here, or you want to try it differently? Okay, let us move on to next question. Valuation of works, interim valuation, valuing change, final account, loss and expense. These are grouped together. A contractor submits a monthly valuation which includes a claim of loss and expense. Due to architect's late information, a compensation event in NEC or relevant event in JCT. The contractor is also behind program. Detail your process for assessing the interim valuation, specifically separating the valuing change from the loss and expense claim, and outline your responsibilities for agreeing the final account under these circumstances. Although this is mentioning about NEC and JCT, you don't need to worry about that. This is normally the usual contractual procedure. Even if you are doing something from your bespoke, you can explain based on your experience what you will do.
Yeah, let me try.
Yes, please.
Yeah. For the for the interim valuations, I will review the interim valuation first. Then, based on the valuation criterias, I will evaluate. Then, for the claims, loss and expense claims, I will evaluate separately. If it is agreed, then I'll include in the valuation. If it is not agreed, separately, first I will see is there any notices issued or early warning issues, or then time impact is finalized. Those kind of things. Then with the contemporary record and everything it is there. Then based on that evaluation, I will evaluate the claims. If it is if it is agreed the claims, then I will include the monthly evaluation and I'll certify.
Okay.
Certified.
Anybody wants? Yes, please. Certify and
process my payment recommendations.
Okay. Anybody wants to add something here, or you want to try it differently?
Yes, sir. Can I try, sir?
Yes, please.
After the contractor submission for this monthly evaluation, and notice that it is claim for loss and expenses added, and also there is a contractor also behind the program. After identifying all these parameters, all these activities, all these contained in the payment application, I will check all the permanent burden as per the existing contract conditions, and I will recommend for the certification as a regular process. But for this loss and expenses claim, I will advise the contractor to submit separately, and for the evaluation as issue the notices and support documents and his entitlement. Also here, as a contractor is behind the program, I will check what is the reason for this he behind the program, and who is the responsible for the program. I will also understand based on the contractor submitted documents. Accordingly, I will evaluate and submit my report to the employer. Meanwhile, the contractor's cash flow should not affect. So I will recommend the payment application without the claims, and submit my certificate to the employer for payment to the contractor.
That is also the way you can approach this. Thank you for that. So primarily the question addresses few things. One thing is the architect's late information. The information may have some impact in the works, as well as it is being a delay. So you have to address both separately. When you are having the change, you have to separate it, and loss and expense claim, you will separate it. And also you have to see whether this is having any impact, like you have to take something like window analysis, specifically what is the impact based on the architect late information, and is it really impacting the program based on the contractor's existing delay. Because if the event which is impacted by the architect late information, if that event still not yet started or begin, of course, the time it is not going to have the right impact. So based on those things, you have to see and you have to find ways to keep them. Like some of them will be agreed. The changes will be you can evaluate and make those things commercially finalized and included in your interim payment. At the same time, loss and expense, you have to separate and evaluate them based on the time impact and any cost associated with the delay. You have to evaluate and take a note of it and recommend. Then the final account, of course, you can keep tracking of the final account. So you will be having them rotational final account. Every month you will try to conclude things. You will not keep it open until the end. Those things you have to be on your responsibilities. So thank you. Let us move on to next question, which is about preliminaries and day works. You are auditing a contractor's preliminaries claim. They have included a significant amount of site supervision cost as day works. Advice on the correct contractual distinction between these two cost elements and the audit procedures you would apply to each to justify the payment. So anybody wants to try? Because this is yes.
Can I try, sir?
Yes, please.
After auditing the contractor's preliminary claims for this preliminaries and day works, I will apply I will check both the items in different way. Suppose the preliminaries is the enabling works or the enabling works or preparatory works to support the permanent work of the project. So already there is a provision in the contract for the evaluation of the preliminaries. And it is the claim is there, then I will check the contractual mechanism for the processing the claim. Accordingly, I will take the decision. Also, the day works is the totally unpredictable, or it is the work which is instructed by the employer and which is not susceptible to the standard method of measurements. So I will check whether instruction is there, or it is the specialized characteristics of work, or the mode of measurement is not similar to the existing BOQ items. Then I will check accordingly. I will recommend to the employer my decision regarding the payment.
Yes, thank you, Mr. Joshi. Anybody wants to try differently or add something to this? Because preliminaries cover general site overheads and management. This is primarily, they are the enabling works that supports the deliverable works. So the permanent works which you are doing, it has to have some relevancy in that. But when you are saying day works, this is specific varied work that is under specific requirement other than the permanent works. So when you are having something like a permanent works, that too, which is clearly covered under your preliminaries, then there must be some sort of delay or some sort of disruption. Something happened, then only you will go with the additional preliminaries to cover the cost of the contractor. When it is day works, it is clearly, it should have some basic requirement. It must have some instruction other than the anything that arise out of permanent works which is covered under the preliminaries. So day works, usually there must be some instruction, then you have to have the records for day works by hours or by units which is measured under your day work schedule. Using those things, it would have been approved by the operations or supervising team. Then only you will be able to assess them to include in your payments. Otherwise, you cannot recommend it. This audit procedure, you have to make clear that contractor has to do clearly preliminaries claim, what is there based on the available provisions, and anything comes out of day works, they have to go according to the day work claiming procedures. So you have to separate it and advise him to bring the submission appropriately. Then only you will be able to verify and recommend to the client. So that's what it is, the important thing to distinguish between these two cost elements because both are different nature of requirements. They have been implied within the project, unlike delay or variation of the permanent works, that is different. But when it comes to day works, it has to have clear instruction and procedural record how you are utilizing the day work elements. So that is also important to certify them or recommend them. Okay, thank you for that. Let us move on to next question. Reporting on cost. Post-contract financial reporting. Design a high-level post-contract financial report structure for the client that provides a comprehensive and proactive view of project's financial status, including risk. What are all the things you will include in your report that will help the project financial status that is in the view of proactive nature? Because you are trying to give advice proactively to minimize the risk or avoid the risk or better manage it. So anybody wants to try?
Yeah, let me try.
Yes, please.
When I prepare in the cost reporting, then I'll to minimize the risk, I will attach the risk register, which is every week we are in the meeting we are identifying the risk and how to mitigate the risk, that one, and I'll include the cash flow statements for the cash in and cash out, then how the financial situation of the project can be identified, then approved variations and potential variation, anticipated variations. That one also I will include. Then client can understand the understand and allocate the budget for the anticipated variations. Those things I will include in the reporting when I preparing.
Thank you for that. Anybody wants to add something or try it differently? Okay. So that is the right procedure. But what we will do on a holistic approach, primarily you will have, if you are representing client or you are supporting client from supervising consultant or a cost consultant, then you would be directly preparing it for them based on the original contract sum, agreed final contract sum to date, whichever having the approvals and all. And then there will be some forecast final account. You can keep it as a rolling or those kind of account you can keep. That will have all the risk valued and included in that because this is forecast. It's not clearly evaluated, maybe a proposal or some sort of calculations which is estimating of the risk. And then you will have, like Mr. Rasan mentioned, cash flow forecast, which you have as per the baseline program. And then that has some adjustment made based on the variations or some changes occurred during the progress. That is also you will include. And then analysis of the risk registers. What sort of allowance or contingency you have or you already expend those things, provisional or PC sums, any adjustment to that and variations in different level. All these things you will have including that of a potential claims. These things you will add to the remaining contingency status, that is for the remaining risk, because if you go to the commercial management of RACS guidance note, you have different kind of contingency allowance adjustment. Based on that, you will adjust during the progress, keep the remaining allowance available for the work based on your method of adjustment. That one also you will adjust and advise based on that how far you are in a good position to deal with forecast of the final account. So these things usually what we will make and include to have proactive approach to our cost reporting. So these are the questions what I have. So if you have some other questions or you want to discuss something, we can do that now. Or you want to recall some of the elements what we have discussed already, or any specific aspect within the quantification and costing?
Sir, if you have time, can I ask 2 questions?
Yes, please.
Sir, in general, whenever we go in any project, generally it is driven by the client. In some scenarios where client is keep on changing, during the execution stage, and even during the handover, there are some requirements of the client. So if it is unlimited changes which are happening from client, so how do we tackle that and how do we resolve?
That's why, so whenever we are having those kind of, or even in general standard practice also, we should establish chain control procedure that is very stringent to get approval for the change to be implemented. So, and time bound. So what is the thing that how far they are ready to do? Because as long as it is becoming late to instruct the change, that is going to cost you more. That should be there from the client. And the client also, usually the person who are instructing the changes, they are not responsible for other sort of responsibilities like financially or technically within their organization itself. So we have to make like RAC matrix, which is advised in the many RACS guidance notes. So how you will establish the person responsible or accountable or consulted or informed, these kind of things you will establish each kind of risk, and particularly addressing to the departments or change which area it is going to affect. Based on that, you have to define the people and let them involve in making the decision to implement the change. Not just one particular supervising client comes and instruct directly at site and without any follow-up or without taking any responsibility towards it. So those kind of things can be minimized by stringent change control procedure that has to be very robust, by clearly identifying the people from the same client representatives, because not just client means the person who is there on the senior management level, they don't go in detail. So you have to take help of his own financial department, technical department, other people who work on day-to-day basis for the project budget. So whom they have the responsibility towards it, you have to include them in your RACI matrix and establish it well ahead of the project execution during the kickoff meeting or something. Chase out the client's department details or people involved within their organization and include them in your change control procedure. That will help you to manage it. At least it won't deteriorate or make it like very difficult to follow up with the change instructions. It will help you a lot. So that is the thing we have to do. Is
But
it
in
clear?
general, sir,
Or? Yes, please.
if the owner itself is having money and is okay with the changes happening, and if you're making the process of changes very stringent, then client will also have a plan to change you also.
No,
The
that's what I
PMC
said.
or the
If they are
consultant.
ready to do and you are getting financial arrangement for everything he is ready to pay, then there is no purpose of questioning him. What is the purpose of questioning him? He is ready to
Exactly.
spend money.
Exactly. Now the
You
problem
just
is,
want to take his signature in paper. Take
yeah,
it. That's what you have to do.
yeah.
Because he
Now
should not take the step back.
yes, sir.
Because he is giving the instruction based on his capability to spend, then you have to make use of it.
Yeah. Now
So
the
make
problem is,
sure
sir,
that it is getting signed on time. That is what important.
yeah. The problem is now, if we do any changes in the flats orientation in a residential building or any design pattern, then it will have an impact on the software designing time also. So the
Yes.
drawings will be taking time, and consultant will also be taking time in the revisions. Let us assume things are happening at terrace level. Well, building maintenance system and facade cleaning is not planned, and the end stage the vendor is brought. So when the work orders of the main contractor is changing from beyond the limit which is given in RACS, So if it is 100 and if it is becoming 130, 140, so how to tackle this variation also?
So it is based on your contract which you are agreeing. If contractor agreed for something and that is clearly giving the right to change, and of course contractor has to take that order. There is no way to get out.
Yes.
That is no way because you can try to get compensation for all your time and efforts, everything. Other than that, there is no other way that most of the contracts are bespoke and the client, they are changing it on their favor. The only thing you can do is get it signed well ahead and submit your proposal with as much as detail at the early stage to get it approved. Other than that, we can't do anything practically. Okay, theoretically, we can speak about a lot of things, but when the client is having so much influence in the project and he can do anything, then even for his convenient, he will throw the contractor and bring someone else.
Yes.
That is the case. So we have to have better tackling approach with that kind of client to get compensated. That's what we can do. Other than that, we cannot go against his will and try to complete the project because finally it is his project.
Now, coming to the costing part, sir, let us assume if a slab is going to cast and change has come, so there will not much be breathing time to do the costing part also. The things have to move on its side. So if we put pressure on the team also, what kind of costing we can give for a change management which is done instead of, let us assume 2 rooms, it has become 4 rooms now. So how as a layman or how as a professional we should submit our changes for the costing? And the costing can also be approximate, no sir, so we cannot take the logistics. So that costing part of the revision we are not able to submit in a realistic form. So can you guide and throw some points on this?
So usually when you are doing for the first time, it cannot be 100% realistic. So if time permits, yes, of course you can do that. But already you are in the process of changing the ongoing work, then it is really difficult. So you have to include at the maximum possible level. So you have to find some benchmark or thumb rule and try to include as much as possible. Then get the client clear his mind of whether he wants to go ahead or not. That is what important. So he has to give tentative approval based on that. And finally, of course, as when you are proceeding with the work, you can revise the thing based on the actual implementation. But tentatively or magnitude of you are giving some proposal that will be like on the higher side only. You cannot go like precisely this is going to help the client or you are going to get paid for it. Nothing like that. This is only for take the decision. So if the client is well with proceeding ahead based on the highest value, then automatically you will be in a better side. So you have to try to include everything. So what is possible, that's what you have to do. So you should not keep it minimum and later it will be difficult for you. You just quoted this. Now you are trying to bring that. I won't agree. That's what the client would come back. So usually it is important to include everything at the maximum level what you would expect. So that's what you have to do and try to include someone like if you want to go ahead with further detailing, then you have to say that this much time is required or effort required. That will also cost. So you have to give those details and include it. Any
So last
additional
question
team
from my
members?
side.
Yes, please.
In general, for a kind of a project where there are 50 floors in a residential project of 4 towers, so how do we plan the number of required resources for project and also for the QS department?
I didn't get your question.
Uh, for a project like 4 towers in residential, each floor is having 50 floors and 4 towers each in a project. So my question is, how do we plan the resources required for the project and also for the QS department? From your experience, for a
No,
project of four
it
towers,
depends on many things because even those kind of projects, even a part-time QS, only one single QS has been deployed. That is also the case. Even with some sort of in Middle East like MR kind of developers, they agree for 50% attendance of a single QS. If it is a standard residential towers of 4 towers with 50 identically like floors are identical, in that scenario it is fine. If you have so many different flow structures and complicated designs and your design details are not completed, you have so many things to develop further, then you have to decide based on those things. It's not directly simple like one rule fits all. So it is what sort of details already available with them. Either if you have all the things are available clearly from the tender point, as I mentioned, even a single QS part-time, he can handle that. That is not going to be a problem. But as you mentioned, if changes are keep on, what kind of client you are dealing with. If you are going to get so much of changes during the progress of construction, and of course, if there are a design detailing or bespoke elements are involved within the project, that requires further design development during the project, because in some of the projects, even MEP works, they include under the provisional sum. So it is not as simple as you can say a residential tower of identical floors. That is not the case. Maybe you have some superstructure of parking floors and flats of the same nature and type and orientation, everything replicating each other, then that is the simple scenario. But if it is complicated, of course, even a team of one managing quantity surveyor with 4 junior quantity surveyors with 2 draftsmen to handle with drawings and quantity takeoff, all these things would be required. And you need specialists for each trade if you are expecting so much of provisional sum items to be design detailed at a later stage. That is also important. So it's not one rule that fits all. You have to see the project and see the details available with you, and based on that you have to decide what sort of scenario you are going with, and is that acceptable. You will get paid by the client. That is also the case, whether they are ready to pay. Yes, Mr. Shifa, the advice on what needs to be considered while pricing a undefined provisional sum on tender. So undefined provisional sum is a contingency. It is like you don't know what is that. It is based on benchmark, how much risk you are getting from those kind of projects. What type of projects
Yeah,
in
the
from the
example.
previous historical? Yes.
Okay. Actually, there is one example like the design was design and build project. The employer what the design issued, it's based on like a lead silver rating, and they
Okay.
have allowed some amount like so this can be called as an undefined provisional sum. I mean, they want to develop it to gold, so they have
No,
allocated some amount.
it is not undefined. When it is a design and build, there is no only the contingency is undefined provisional sum. Other than that, all the works, whatever you have, even the performance requirement, functional requirement, that is the client's requirement details. You cannot say it is undefined. It is defined only. Undefined is the contingency for the risk, which is uncertain. You have no detail about them. Even at the schematic detail also not there. Then only you can include those things under the contingency allowance as a undefined provisional sum. But all other things you have as a provisional sum. You can control it based on change order, like variation procedure, what you would do during your
Post interest.
nomination and award of the provisional sum items.
Okay.
Okay, if anybody having something,
Sir, thank you, sir.
welcome, Mr. Joshi.
Yes, sir.
Okay, if we have done with our discussions, we can call it as a day. Thank you for joining.
Thank you. Thank you so much, sir.
Thank you, sir. Thank you, sir.
Yes, please. Thank you all. See you in the next session. I will keep in touch.